Namaskar, I am Parsuram Shukla, Training Associate Economics, KVS, JIT Bhubaneswar. Welcome to my economics class. Today, I will be discussing with you the second video lesson of Money and Banking, Class 12 Macroeconomics. In my first video lesson, I have discussed the barter system of exchange and functions of money. So today, I will be discussing Chapter 2, Definitions of Money and Money Supply. The content to be discussed in this video lesson: definitions of money, money supply, meaning and measures of money supply. The learning objective: at the end of this video lesson, you will be able to state different definitions of money, define money supply, elaborate various measures of money supply. So let us discuss the definitions of money. Money is anything which is generally accepted as a medium of exchange value, store of value, and means for standard of default payment. The term money is used to cover all such things like coins, currency, checks, etc., which are used to conduct business transactions and settlement of business claims. It must be noted that money can be any commodity chosen by common consent as an instrument of exchange of goods and services. The legal definition of money. So in this legal definition, as we know, according to this definition, money is what the law says is money. So anything which the government declares as money is money. On the basis of legal recognition, money is of two kinds: legal tender money, non-legal tender money, or optional money. Legal tender money, money which can be legally used to make payment of debts or other obligations, is termed as legal tender money. A creditor is obliged by law to receive such money in payment of debt due to him. Legal tender money is of two kinds: limited legal tender and unlimited legal tender. Limited legal tender, it refers to that form of legal tender money which can be paid in discharge of a debt up to a certain limit. Beyond this limit, a person may refuse to accept the payment and no legal action can be taken against him. In India, coins are limited legal tender. Unlimited legal tender, it refers to that form of legal tender money which can be paid in discharge of a debt of any amount. Legal action can be taken against a person who refuses to accept this money. In our country, paper notes are unlimited legal tender. Non-legal tender money or optional money, it refers to that form of money which is generally accepted but legally one is not bound to accept it. For example, checks, bank drafts, bills of exchange, etc. do not have legal backing and their acceptance is totally optional. These checks, bank drafts and bills of exchange, we may discuss it in the banking when we discuss later on towards the end of this unit. Functional definitions of money. According to this definition, money refers to anything that performs the four basic functions of money: medium of exchange, measure of value, standard of deferred payments, store of value. In the words of Crowther, an important economist, money may be defined as anything which is generally acceptable as a medium of exchange and at the same time acts as a measure and store of value. Definitions on the basis of liquidity. On the basis of liquidity, money can be classified as money or liquid form of money and near money. Money or liquid form of money. Money has the quality of general acceptability which makes it the most liquid asset. By liquidity, we mean the speed and certainty with which an asset can be converted back into money. Coins, currency notes and bank money are the most liquid form of money. Near money, it includes those financial assets which are not liquid as coins and currency notes but can be easily converted into money for paying debts. For example, national saving deposits, fixed deposit receipts, bonds, etc. They are as good as money but are non-legal tender money. It cannot be used directly for purchase of goods and services. That's very important. But it can be converted into cash within a short span of time. Definition on the basis of scope. According to the scope of money, it has been defined in two ways: narrow definition of money, broad definition of money. Narrow definition of money, it includes those things which function as money. It includes currency notes, coins and demand deposits of banks, as they perform the following functions of money, that is medium of exchange, measure of value, standard of deferred payments and store of value. Broad definition of money. In addition to narrow money, it also includes time deposits in banks and post offices. Time deposits are included as they have high degree of moneyness and can be converted into checkable deposits within a short span of time. Broad definition of money is equal to money assets plus near money. Then we go to the money supply. Money supply refers to total volume of money held by public at a particular point of time in an economy. Features of money supply. It includes money held by public only. This is very important. The term public signifies the money using sector, that is individuals and business firms. It does not include money creating sector, that is government and banking system, as cash balances held by them do not come into actual circulation in the country. It is a stock concept, that is money supply is a stock concept, that is it is concerned with a particular point of time. Then measures of money supply. Till 1967-68, Reserve Bank of India, that is RBI in our country, used only the narrow measures of money supply. But since 1977, 4 alternative measures of money supply, that is M1, M2, M3 and M4 have been evolved. These M1, 2, 3 and 4 will be discussed in detail later on towards this presentation. So first we discuss M1. It is the first and basic measure of money supply. It is also known as transaction money, as it can be directly used for making transactions. M1 is equal to currency and coins with the public plus demand deposits of commercial banks plus other deposits with Reserve Bank of India. M1 is the most liquid measure of money supply, as all its components are easily used as a medium of exchange. Currency and coins with the public. It consists of paper notes and coins held by the public. Remember, any currency held with the government and banks is not to be included. It includes coins of denomination of rupees 10, 5, 2, 1, etc. and paper notes of denominations like rupees 2000, 500, 200 and 100, etc. Currency money is also termed as fiat money. Fiat money is defined as the money which is under the fiat or order from the government to act as money. That is, under law, it must be accepted for all debts. It is also termed as legal tender money. That is, fiat money is also termed as legal tender money, as it can be legally used to make payments of debts or other obligations. Demand deposits of commercial banks. It refers to demand deposits of the public with the commercial banks. These are checkable deposits and can be withdrawn or transferred at any time by the account holders. A demand deposit is treated as equal to currency held, as it is readily accepted as a means of payment. Only net demand deposits are included in M1. It must be noted that demand deposits are taken on net basis, that is, interbank deposits are excluded. Interbank deposits are the deposits held by banks on behalf of other banks. Such deposits do not form a part of the money supply, as they do not belong to the public. It should also be noted that while calculating M1, measurement of money supply, only demand deposits are considered as a part of money supply and not the term deposits. That's very important. Demand deposits is equal to saving account deposits plus current account deposits. Other deposits with the Reserve Bank of India, it also includes deposits. It includes deposits held by the Reserve Bank of India on behalf of foreign banks and governments, public financial institutions, World Bank, International Monetary Fund, etc. However, it does not include deposits of the Indian government and commercial banks with the Reserve Bank of India. It must be noted that other deposits with the RBI constitute a very small proportion of M1. Therefore, they do not have any significant role to play in the monetary policy formulation. What is high-powered money? That is H. High-powered money is money produced by the Reserve Bank of India and the government. It consists of two things, that is currency held by the public and cash reserves with the banks. It's very important. Money, that is M, versus high-powered money, that is H. Money consists of currency and demand deposits, while high-powered money, that is H, consists of currency and cash reserves with banks. It means currency held by the public is common in both of them, that is both in M and H. The only difference is that money includes demand deposits of banks, while high powered money includes cash reserves with the bank. H is high powered as compared to M because cash reserves, that is part of H, serve as the actual base for generation of demand deposits. Then the next component of money supply, that is M2. It is a broader concept of money supply as compared to M1. In addition to M1, it also includes saving deposits with post office savings. That is M2 equals M1. That's all the components of M1 plus savings deposits with post office savings bank. Savings deposits with post office savings bank is not withdrawable by check. That's important to remember. So they could not be placed under demand deposits with banks. Why post office savings banks cannot be equated with the demand deposits with the bank? That is, saving deposits with the post office savings bank is not withdrawable by check, whereas demand deposits with the bank can be withdrawable by check. As a result, the concept of M2 was evolved. Then M3, this concept is broader as compared to M1. In addition to M1, it also includes net time deposits. So M1 plus net time deposits with the banks is equal to M3. Then M4, this measure includes total deposits with post office savings bank in addition to M3. So M4 is equal to M3 plus total deposits with post office savings bank excluding the national savings certificates, that is NSC. Important facts about measures of money supply. The four measures of money supply represent different degrees of liquidity, with M1 being the most liquid and M4 being the least liquid. M3 is widely used as a measure of money supply, and it is also known as aggregate monetary resources of the society. M1 and M2 are generally known as narrow money supply concepts. M1 and M2 are generally known as narrow money supply concepts, whereas M3 and M4 are known as broad money supply concepts. So here is an example to clarify M1, M2, M3 and M4. Example of money supply. Currency with the public, suppose it is 84,000. Demand deposits with the bank is 68,000. Other deposits with RBI is 3,612. Total deposits with post office 22,500. Time deposits with the banks 2,555,000. Post office savings bank deposits is 5,528. So how this is worked out? You see, solution: M1 currency with the public plus demand deposits plus other deposits with RBI. So it aggregates to 1,55,612 because these are the figures given in the example. M2, M1 will be included plus saving deposits with the post office savings. So M1 is 1,55,612. Plus this much is saving deposits with the post office savings bank. So it is 1,61,140. M3, M1 plus net time deposits with the banks. So M1 figure is here. Then net time deposits with the bank is 2,555,000. So it is aggregated to 3,56,167. So M4, M3 plus total deposits with the post office. So M3, the figure is 3 lakh this much, the 3,56,167. plus 22,500 is the post office total deposits with the post office. So it is 3,78,667. So let us do a worksheet. So as I always say, you have your notebook with you and see the question and mark your answer, write your answer, and later on you tally the solution which I will be giving with your answer, how far you are correct or how far you are not. So you see the worksheet. Money supply is a dash concept as it is concerned with a particular point of time. Money is anything which is generally accepted as dash of exchange or dash of value and means for standard of default. Money supply refers to total volume of money held by a dash at a particular point of time in an economy. So this is fill in the blank. Then you have this true or false. Money supply is a flow concept. High powered money includes only the cash reserves of commercial banks. M1 includes net demand deposits and not gross demand deposits. Money supply does not include money held by government and banking system. M1 is also known as transaction money. So then I have given this matching type questions. From the set of statements given in column 1 and column 2, choose the correct pair of statements. So column 1, 4 options are here and column 2, 4 options. So you have to tally You see, money supply, M1, barter exchange, demand deposits. So here total volume of money held by the government, currency and coins with the public, plus demand deposits of commercial banks, plus other deposits with the RBI, exchange of goods for money, legal tender money. So which pair is correct? Match the statement given under A with the correct option given under B. So A and B are given. A is only money supply given. So B, from B you have to see which one is to be tallied with the money supply, that is flow concept or stock. Then the third one, match the statement given under A with the correct option given under B. So from A you have to see this M2 and M3 are given here. So which one will be correct? M2 then M3. So B, the column is given here, M1 plus total deposits with post office savings bank excluding NSC, M1 plus saving deposits with post office savings bank, M1 plus net time deposits with the banks. Which option will be for M2 and which option will be for M3? That you have to find out. I hope you might have done that. So let us see the answer. Tell you. So the red mark or red letter words or sentences are the answer. Fill in the blanks. You see, money supply is a stock concept. Then B, you see, money is anything which is generally accepted as a medium of exchange, measure of value, and store of value, means for standard of deferred payment. Then C, money supply refers to true volume of money held by public at a particular point of time in any company. Then the true or false, you see, with reason, money supply is a flow concept. So it is false. Reason is, it is a stock concept as it is measured at a particular point. High powered money includes only the cash reserve of commercial banks. It is a false. Reason, in addition to cash reserves of commercial bank, high powered money also includes currency held by the public. M1 includes net demand deposits and not gross demand deposits. Whether it is true or false, it is true. Reason, as net demand deposits do not include interbanking claims. Then money supply does not include money held by government and banking system. It is true. Reason, as money held by them do not come into actual circulation in the country. M1 is also known as transaction money. This is true. Reason is, as M1 can be directly used for making transactions. Then in matching type question, you see for A, in column 1 it was M1. So M1 is this only. The option B is correct. 3B. So money supply is a stock concept. You see the answer. Then from A you see M2 is equal to what? Now M1 plus saving deposits with the post office savings banks. M3 is M1 plus net time deposits with banks. Hope you have your doubt cleared after seeing the solution. Then as usual, I have some home assignment questions for you. You see, define money supply. What are demand deposits? What is bank money? State the two components of money supply. State the meaning and components of money supply. Define money. List its components. So as usual, I have given this 1 mark or 3 marks and 4 marks question. These are the type of question asked in the board examination. See you all in my next video on the classification of money and demand for money. Please give your feedback to parsuram.shukla@gmail.com and my WhatsApp number is 99386494454. I hope you are benefited by these educational videos. So kindly like, share and subscribe so that next videos reach you immediately. Thank you very much for watching the video. See you next in my next video. Thank you.